Good morning, everyone, and welcome to the morning homework session for Friday, February the 28th, 2014. Not only do we have a Friday, we have an end of month. I love Fridays that fall on the end of month. Always makes everybody happy in the market. This is Quantum Leap. We are a self-organized learning environment. My name is Doug McKay. I'm the founder and head moderator. Each morning we come together in this live go-to to talk about the markets, look at the macro to the micro view, go through our morning routine, and then set our trade levels and our targets up for the day. So we're going to get started right away. By the way, this is not a commercial venture. This is a private organization. There's no monetary gain or anything we're looking to sell to you today. So let's get our legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. All right, so let's go take a look at the numbers. Each morning we'd like to look at the macro to micro, where we are in terms of the marketplace. Of course, you know, we've struggled for the last week to determine whether or not we're in a bull year or a bear year, and you know, the buyers and sellers have been battling around this 1837.75, which is our year open. Our current year high was put in just a couple days ago at 1856.75. Our current month low is way below us, down at 1732, so it's really not very significant. We do have the prior month high and the prior year high just below us. I think we're trading above it right now. I don't have my chart looking at it. 1845.75. So, you know, those are basically the macro key numbers you want to look at. Yesterday, looking at the intraday, the Globex overnight was lower. Going into yesterday's RTH session, we opened the Globex on Thursday at 43.75, had a high of 47 and a low of 32.75. There's that micro composite depot of the former balance area that we were in. We went down and picked up buyers down there again. And I'll talk about that when we get to the composite chart. And then we opened right at that 1840.50 or just above it, which was a key level we talked about yesterday in yesterday's morning session. We opened auction in range. Now, we had a neutral day, and a neutral day has a good probability of creating a neutral day following, or, you know, a rotational day. We didn't quite break the both sides of the initial balance, but we did have very much a rotational day. It was actually kind of an ugly looking profile yesterday. Our opening swing high, 42.50, opening swing low, 40.50. You can see they went right down to that key area and held, and you know, rotated with a upward bias, which was my main hypothesis yesterday if you were in homework. We had a 2-point opening swing, initial balance high 45.25, initial balance low 38.50 with a 6.5 range for your initial balance. Normal range for a IB is 6 to 9 points, thereabouts. We have been seeing wider ranges as of lately. All our intraday numbers were higher, so we kind of repaired what they did overnight, and eventually, you know, rotated up when we closed near the highs at 1854. So the accepted value around that 49 area, 48, 49 area, which is the current microcomposite for the balance that we're in right now. And the daily VPOC shifted up to 51.50, and we had a higher low, higher high, and a higher 1230 number. Greens are trending up, reds are trending down. Looking at the 20-day ranges, so we're just under 18 for the RTH sessions, just over 21 for the full session, and just under 11 3/4 for the Globex. Nothing else really jumps out except that we did have a higher value area. We had a higher value area high at 53.50 and a higher value area low at 44.50. Value area is simply where 70%, I use 70%, some people use, the 68, standard deviation, but I use 70%. That's where 70% of all the volume, so it's call it the accepted price range or value. And we have 9-point value area. And you really want to follow how value is increasing or decreasing, and that's why we watch the value areas. We had another make and break on the IB. We do a time study of when the initial balance, either the high or low, is broken. The highest probability is between the 9:30 and 9:45 central. We call that the pocket. And anytime we break, set the IB and then break it right away, we call it a make and break. And it helps you if you're near a initial balance high or low inside of that first 15 minutes. And you're getting something to lean against. These are good trades that you can take because they have high probability of going and breaking. The one thing I always caution is make sure that that trade allows you to get into the trade and get scaled and funded before the actual break. So if I was looking to get into a short down for the break of 44.50, I'd want to make sure that I scaled my first contract off before I got to 44.50 or right at 44.50. Because a lot of times you'll get a 1-tick or 2-tick IB break reversal, and you don't want to be caught trying to take a breakout trade on initial balance. You want to take those trades so that you're in them before they actually break. Going over to the daily report, so far we have a full session high of 55.75 and a full session low of 49. Our 20-day ATRs to the upside target is 18.70 and our ATR 20-day target to the low side is 18.3475. And there's that 34 area that we keep talking about below us that we need to hold. News today, we had Canadian GDP and prelim GDP at 7:30 Central. Not sure how the market reacted because I was already in here. Then we have Chicago PMI at 8:45 Central. We've got revised University of Michigan consumer sentiment coming out, and then we have pending homes. So that first half hour today, we've got a lot of news. So be careful, for getting into a trade. Make sure you've got good market conditions with strong area to lean against. And then we've got FOMC member, a couple of them speaking at 9:15 as well. So we've got some headline news, we've got some scheduled news that could revalue this market. So just be careful, be patient, and make sure that you know where you're wrong very quickly. Don't get stubborn and believe that your hypothesis is the only one in the market. So next thing we'd like to do is take a look at the macro to the micro, see where we are within the trend. Obviously you can see that for all the way from that low down at 665.75, we've been in just a very powerful trend up on the monthly, and especially powerful in the last year, whereas we never closed below the 9 EMA. I use 2 moving averages on my charts. I use 9 EMA, exponential moving average, and a 20 SMA, and these are the ones that I like. Doesn't mean that you can't use other ones. I like the exponential as the closer time frame because it follows price tighter, and I have a trade setup that I like to take, which is a tech gap trade, and I'll talk about that in just a few minutes. So we got good slope, we got good separation, trend is very much intact, and we're trading at near the all-time highs. So the trend is very much in full. Oops, went to the wrong one. Going to the weekly. Same thing with the weekly. We did come down. We did challenge the 20, and we got below the 20, but we never actually closed below it. We popped up, closed above it, broke above the 9, and now we've got slope and separation to the upside, and we're trading above the previous, I don't know, 8 or 9 weeks right now. So the weekly trend is very strong. Going down to the daily, you can see that the daily, we cross back up. We do have that naked cross down at 1794. This is an area I anticipate that we're going to retest sometime in the near future. Of course, it's on the daily time frame, so you have to put it into that context. But right now, we are, going parabolic right now, and we have, we've got a very, high slope right now. And I'm considering this to be somewhat of a possibility of a blow-off top. You've got what I consider to be somewhat of a foo-bar Mr. Sneaky setup, which is Mr. Sneaky is an inside bar here, and these signal reversals. Doesn't mean it's going to be off of this particular bar, but what we're waiting for is the high after the Mr. Sneaky to be put in and then respected. And when I mean respected, I mean have a lower high. Right now we have this high at 1855.75, which is a double top right now. Double tops do not count, so I have to wait for this double top to be respected by having a lower high, and then we're likely to get a retrace. Right now we've got a bit of a tech gap, and a tech gap is where price action moves away from the 9 EMA, and that will tend to either consolidate and go sideways, and the 9 EMA will catch up and we'll close that gap through time, or price action will come down to meet the 9 EMA and we'll close it by price. Most of the time you close the two in combination, and this is a perfect example of a tech gap. We broke, actually two of them. We broke down, price moved too far away from the 9 EMA, and through time and price we moved up and closed that technical gap. Then we rejected the 9 EMA and then broke all the way down, created another technical gap, and this one we closed by time. And you can see here's a good example of a Mr. Sneaky. This is a tech gap, Mr. Sneaky, and then a rotation back to close the technical gap. So it's just something to watch and study. Don't take my trade setups, design your own, and back test them, and you'll find that they're good trades. Going over to the geometric chart, we're broken out of I put this new downward sloping fork, but we do have this strong move up, so I'm probably going to have to do some studying over the weekend and redraw my geometrics. But currently right now we're above the downward sloping fork's upper line, and a retest of that line will bring us down to 1850 area. We get down below it, then I'd be looking to close the tech gap on the daily, come down and test the 9 EMA, which is sitting right on the upper line of this intermediate fork that we added in a couple weeks ago, and a test down there. Lo and behold, 1840 area, and that 1840 area is an extremely important area. Of course, we've got an energy point between the long-term fork that we've been following for many months, the intermediate fork and the downward sloping fork, all in this area down here in the 1835, 1836. Really, it's 1834 that I'm watching down here to test the lower line of the long-term upward slope and that key CLVN at 1834. Let's go take a look at the intraday. Whoops. So you can see on the 4-hour, we've really just been chopping around and consolidating in this area. We had a tech gap on the 4-hour, came down and closed the tech gap right here, and we've held the 9 EMA, and we're currently trading it, but there's really no trend right now. It's just too choppy on the 4-hour, so the 4-hour doesn't give us any real clear indication of what the trend is. Same thing on the 30-minute is just sideways consolidation. We do have a 30-minute Naked Cross down here at 1841.06. So if want to write that down. That's a high probability where a naked cross is like a naked VPOC. It's unauctioned territory. It's where the 9 crosses to 20 and the price action moves away and leaves it naked. And you can see through history, anytime you get these naked crosses, the market will come back and re-auction that territory and test that price again. And what we do is we watch them on the 5, the 15, and the 30 minute in order to use them as probable targets for our trades. But in terms of trend, there really isn't any trend. We're just going sideways in the Globex and accepting this value up here in around this 49 to 51 area. Going down to the 5 minute just to get a more granular intraday view, and it's the same thing. It's just chop. We're consolidating right now, and we said that yesterday. We anticipated that we weren't really going to get any vertical development. That we were going to get chop with a upward target of that 1854.75, and we actually went and tested that 1840. Took us all day to just chop around, and then finally went up and tested that in the extended trading session between 3:30 and 4:15 Central. So let's go take a look at the big picture and the composite. You can see that the important thing I want you to pay attention to here is that we came up after falling out of this balance where we put in the all-time high at 46.50 and then the year high at 45.75. We fell out of that balance and came all the way down to that 1732 area, and that was the key area that started this whole move up. We came up and we accepted that 1732, and then we launched up from there, just stair-stepping and finding balance and price acceptance until we got up there. Then when we fell out of this balance where they didn't have enough buyers to hold us in balance, they had to go find them. The first place they went was the 1802, which was where they last accepted value, breaking out of this area, and then we broke down to that 1781.50 and tried to hold there. That was where the most accepted price was in this balance. We couldn't hold that. Then we came down and we continued to price advertise to the buyers until they came down to this 1732 area, and we basically came right down there. The buyers finally stepped in, and then we stair-stepped back up. And we went back up, accepted value here at 1751, stepped back up, accepted the lower range of this in around that 1450 area, and then came up and accepted balance in around the 1832.25, and then came up here and accepted value at the 1838.50, which was the last price they tried to hold before they fell out of this balance. So you can see how the market will go and search for buyers and sellers based on areas where those buyers and sellers last accepted that price. So now we're back into this microcomposite balance area that ranges from February 14th through to yesterday, and I can actually even take this day out, but we rotated back in on this 5-day microcomposite. So it's giving me significant information, because the information it's saying is we've now accepted the overall value going from the 14th through to today, which is at this 1841.42 area, and now we're accepting value higher in the last 1, 2, 3, 4, 5 days. Is it 4 or 5 days? Sorry, let me just move this to the back. It's 4 days. So in the last 4 days, they've come down a couple times to this 41 to pick buyers up with more conviction, but now they're accepting that value higher up here in around this 1848.75, 1849. And the value area high right now for this this larger microcomposite, the value area low is that 34, and that 34 really separates the two main distribution areas, okay, in long-term price acceptance. This is the composite. This is all the volume, going back to, well, really only back to December the 14th because we'd never been up here before. But this is where the buyers and sellers like to do business. And you've got two main distribution points at 32 and a quarter and 36.50 with that 34 and a quarter area in between them, and it's now our value area low. So that becomes a very key area for us to watch. But now we've moved higher into this, this new balance around the 1848.75, and the value area low, okay, is right here at that 1841.25. So they keep coming down. Buyers saying we're accepting this value, and we're going to step in and hold us here with a couple moves down to test that 1840 level. But we're holding that 1840 level. Price is being accepted higher. We're outside of the value area high at 49.75. So we're not out of range, and but we are accepting value outside of the value area itself. So that's significant, and we're on a Friday at the end of the month. So you've got all your mutual fund managers and your fund managers that are want to put window dressing on for a end of month close. So usually when you get a weekend and a month end, you have a bias to the upside. That doesn't mean that that's what's going to happen. It's just the market is telling us that we're accepting value higher, we're outside of value, we've broken out and we're holding above that value, and we're near the all-time highs, and it's a Friday and a month end. So the likelihood is that we'll probably go and test the upper range and test this 1856.75. Besides the fact that we've got that double top at 55 and a quarter, I think. But we'll take a look at that on the intraday. So what you want to watch for right now is you want to watch this area in around here at this 49.75 to 48.75. So that's basically a 1-point range. If we break below that small little range, then look for a move down to test the other side of a balance, which is really now down here. I don't know why there's two of these. No, because it's doing my auto peaks and valleys. Okay, so this is that 46.75 area or 46.50 we were watching the other day. If we break below that, then I'd be looking for a move to come down and test the other side of balance and come down to this 41.75 with the key area that we need to hold at the 1840 level. And if we break below that 1840 level, then I'd be looking to get short below that and into testing the year high at or the year open at 1837.75 with a likely push down to test the CHVN and this main distribution zone around 1836.50, with 34 being a major area now that we need to hold. If we get below this 1834, then we're getting outside of value to the low side, and we're likely to get a much bigger rotation down, and we probably have an interim top end because it's probably going to have to come down further to find buyers with enough conviction, because so many, if you look at the COT report, the big players, okay, are already getting short. Whoops. This is, and it'll be interesting to see what the COT report is. Actually, the numbers are compiled on Tuesday, and then it's put out on Friday afternoon. So it'll be out this Friday afternoon. But right here is the zero line. And above the zero line is net positive, and below the zero line is net negative. And it's broken down into three main components: large spec, small spec, and commercials. And you can see that commercials and large spec are already net short, and they're probably selling into this rally right now. And the small specs, the retailers, are chasing this all-time high and likely to be left as bag holders. So just be aware of that, so that if we get below that 1834 level, I think we've got a larger move that's likely to happen. With 32 and a quarter as the first target below, 28 and a quarter, the other side of that balance, and then below that you've got 25, and the big number right now is where the accepted value after breaking out of finding the buyers down here. The last area that they accepted value outside of this this balance zone that we're in is down here at this 1814.50. So just watch that. So let's move over to move our overnights and put our levels into the chart. Overnight we've got that 1855.75. That is a double top, so that is a weak high. So we've got a trade area up here at well, I'm going to make it a target because there's something I want to do here. 1855.75 would be my first target, and then you can see that right now our range from yesterday, this is yesterday's profile, our range high was 1854.25, and our value area from yesterday is 1853.75. And we're banging up against this and testing it. So what I'd be doing is I'd be using this 1854.25 as a trade level. If we break out of there, I'd be looking to get long into 55.75. If we come up here and test this level, and not just the range, the range high, but the range, between the value area and the range high, look for responsive sellers to step in. If we open up right now, which we've got 15 minutes thereabouts, you're going to be inside of value and inside of range. So they're likely to come up, test the range, and then I watch for a possibility of responsive sellers stepping in here to hold us inside of range and inside of value. If they can't, then you'd look for a continuation, with the first target being the 55.75, second target being the 56.75, which is the all-time high right now and the year high. I know they're really close together, but I still want to show them, so I'm going to put two targets right here. But you definitely want to, you definitely want to get funded before that 55.75. And then we have the ATR target above at 1870.25. And I really don't have, there's a couple measured moves up here. There's one at 68, and I think one at 62 area, or 62 or 64. But it's really that 70.25 that I'd be looking for if we break out. If we hold inside of value and inside of range, I'd be looking for a rotation back down to test the VPOC and the this microcomposite VPOC from the last 4 days in around that 49 to 48.50 area. So that will be our main target below us. And our value area, our overnight low is right there as well at 1849. So you've got some confluence there with the overnight low, the VPOC, the microcomposite VPOC, all around that 49. So if we hold inside or we break out and then we get back inside, I'd be looking for a move down to this 49 to take out the overnight low. So my main hypothesis really going into today's trade is, do we hold in range and value? And if we do, a rotation back down to take out the overnight low with a probable continuation down into that 46 area, that 46.45 area that is the area right here on the other side of balance around this 48.75, and you've got an LVN right here at 45.75. So that would be the next trade area that I'd be looking at. We call them trade areas, but they're targets as well. You just want to understand that the trade areas, you have possible, possibility of responsive buyers or sellers stepping in to rotate off of those levels, but they are targets. I mean, if I got short into this 49 area, I'll scale before I get to 49, but I'll keep one running so that I can get the continuation to the other side of balance and a possible larger move down. And then we've got the value area low down here at 1845. Really should expand this trade area In fact, you know what I'm going to do? I'm going to just move it down so it encompasses the LVN and the value area low. And then if we get below that value area low, then I'm looking for a move down, and the main target below there will be the 1842, 1841.75 area, with the other side of that balance, and the key level that you want to watch is that 40 level, which is basically right near the open from the other day, but you got to look for a possible push through to test the range low, and the we've got two range lows down at 38 from Wednesday and 38.50. So if they get through that 1840 area, or continue push through that 42 area, I don't think the 40 is going to hold as much. It's not becoming as strong. You can see that each time they came down here, they had a little bit of a push through. So I'd be really looking at this area right here at 38 as your your next trade area. And then below that, the targets are the 3650 CHVN, and then a key level, and the key line in the sand for me in terms of holding for continuation up is this 1834, and then below 34 you've got 3225 microcomposite VPOC, the overall most accepted price that we came up, that microcomposite from December the 23rd to January the 23rd, with the other side of that balance being 28 1/4. And then below that, we've got our 25.50, and the other side of balance being 23 1/4. And if you've been in homework, for any length of time, these numbers just keep coming up over and over and over again. So the more you do this, the more you'll know the numbers. I don't have to look at the charts to put these levels in. I already know where they are. I do the charts for you guys so that you can see why I'm picking these numbers. I'm not picking them out of my head. I'm taking it out from the context and the structure that the market is showing me, the auction is. So let's take a look at the composite. We've got the composite, the Keltner. The Keltner center line is currently at that 51, and that 51, what was it, 5150 was our Globex VPOC. 5150 was our Globex VPOC. So we've got an immediate target right there at 5150, and that will be a test of the Keltner center line that we want to hold. Below that, you've got that 4550 area, which is right there at our trade area that we're looking for. And then if we hold the center line, a test for the upper Keltner line takes us up into that 57 area, and you can see our target above and basically our all-time high and year high up there at 56.75. Now, I want to just again point this pattern out in gold. So I know I'm going long, Howard. I'm going to have to shorten what I do. I know these sessions are long, but there's a lot to go over and try to explain and get newer members up to speed. We've got a long-term pattern in gold, and I don't have this that chart up right now, but we've been watching for months this descending broadening wedge, where we broke out of that the upper trend line of the descending broadening wedge right here, and then what we're doing is we're creating this this rounded bottom, this cup, a possible cup and handle. And descending broadening wedges are very powerful reversal patterns. There's long-term turns in the market. So I've been calling that if we broke out of the descending broadening wedge, that we would have a much bigger move in gold. And then to couple this, since we've broken out, we've had a beautiful move. Our first target when we broke the outside of the wedge was that 1315 area, and all this is verifiable by going back and watching the previous recordings from our homework session. So I'm not calling this after the fact. I called these, way ahead of time, and this pattern right here, this possible cup and handle, is not set up yet, but I'm watching it develop, because that's, as a chartist, you've got to learn to identify patterns as they're happening so that you can react to them and be proactive and not say, oh, look, there was a pattern and look what happened. I do it in real time and ahead of time. So we've got this this cup and handle, and we measured it a couple times with the right rim. We first measured here, down here, because you can have a lower right rim of the cup, but we said, we could come up and get to this 1162 or even slightly higher and still have a valid cup. But what we need now is for this to validate, and it doesn't have to, I mean this pattern may never set up, but if we come down and get below this 1283 or test this 1283 level and get inside of here between the 38.2 and the 61.8 Fibonacci retracement level, then this validates this pattern as long as we don't break below this 1244 level. In fact, it's actually 60% is Bulkowski's measurement. I use the fibs, but you can go as low as 60%, and that 60% is actually that 1240 area, which is a key area in gold. So if we break a little below this 1244 and go down to that 1240 level, it's still, to me, going to be a valid pattern. Then you'd be looking for the buyers, to step in and rotate us back up. And if that happens and we break above, 1345 area, the right rim, you've got a measured move all the way up to 1504.90. Now, the way I would trade this is if we get below 1300, then I would short this and ride the handle down with destinations and targets and pulling contracts and scaling up before you get to this 1283 level, but with the possibility of a bigger move. So leave something running for possible bigger move to that 1240. Everybody will be calling, oh, gold's falling, gold's falling. It's natural. This is a natural harmonic rotation in gold, and it could just set up a very powerful move to the upside, which is reinforced by the fact that we had that descending broadening wedge. Quickly take a look at the gold, and again, I rolled over. I forgot. I have not been busy up in Toronto, so I haven't been paying close attention. And I realized yesterday gold had rolled, and we're over to the J contract, April contract. And we've got this balance area right now around the 1333 level, value area high 3960, value area low is 2890. You've got this CLVN at 2875, so this is what I'd be watching for in gold right now. A break below 2890, look for rotation down into the 23. The previous microcomposite VPOC at 20 and this CLVN at 2160, and if we get below that, a test of this 1317, 1315 area, with the big number being down here, down at that 1300. And again, if you get below 1300, then ride that handle down, and first destination being the microcomposite VPOC down here at 1290, but really watching the move down to the CHVN and the 38.2% retracement at 1283 level. If we can hold above this, I'd look for a rotation back to 33 with a test of the other side of balance at 37, and above 37, 3960, 4560, and the big number up here at 1351.60. Not anticipating any big move in gold other than that today. But if we do get above 1351.60, look for 6370, 77. The big target right now is up here at this 1386.90 area. So that's what I'm looking at. How much time we got? Oh, we don't have a lot of time. Howard, you're going to have to go first tomorrow. Or, yeah, you can go first tomorrow. We won't have homework. But Monday we'll have you go first because I've been talking too much. Due to time, that is going to complete our morning homework session. Again, we're trading just inside value, just inside range. Be careful on the open and watch for a move up and responsive sellers to step in and hold us inside and rotate us back down towards that 48, 49 area with a possible continuation down to 45. But you're likely to get a lot of chop, on this open, especially with news coming up. Remember, we got news at 9 at the 45, 55, and just after the turn of the hour. Everybody, trade well, trade safe, and we'll catch you on the flip side.